and good afternoon to everyone that is currently tuned in live with us on another episode of Phillip Trading Podcast. So I'm your host for today. My name is Junior. With me here today is my colleague William, a senior dealer and marketing executive from Phillip Futures. So how are you today, William?
Yeah, very good, Junior. Nice to see you again.
Good. Nice to see you again too. Okay, so for today's podcast, we were discussing on the topic, can China A50 Index roll back to 2022? So to our audience out there who are currently looking at the China market or very interested to invest in China market, do not miss out this podcast. And once again, I would like the help of all our beloved audience today to share this video to all your friends. The more people that are watching this video, the more we are motivated to deliver greater information, greater content to all of you. So for now, let's jump into our topic for today. Can China A50 Index roll back in 2022? So China market has been one of the worst performing market in 2021, while other global financial market experienced a speculative frenzy triggered by economic stimulus measures. So nonetheless, Chinese Yuan still remains as the strongest currency against the greenback in 2021, reaching the 3.5 years high. Okay, so now William, the first step we want to discuss now is what is the main reason that caused the China market to become underperformed in 2021?
Okay, so basically, China financial market underperformed this year, 2021, mainly due to a series of crackdown on the private businesses by the China government. So let's just quickly look at a series of timeline that the China cracked down their private businesses in 2021. So basically starting November 2022 to April 2021, okay, within this 5 months period, China government implement a new guideline on anti-monopoly and impose heavy penalty on a lot of tech giants like Alibaba, Tencent, due to their monopoly background. So because of this particular event, the share price of these giant technology companies dropped dramatically, like 50% and more. Okay, so when all these heavy index weightage companies drop more than 50%, definitely the benchmark indexes dropped dramatically as well. Okay, so after that event, in July 2021, China government disallowed foreign fund to invest in China private education sector. And this particular incident has caused China education companies' share price to drop more than 70 to 80%. So this is another reason that the China benchmark index and the China market is not performing. And one of the biggest one will be the Evergrande debt crisis that happened in September 2021. So basically, if you look at China or Hong Kong, property companies have a very huge weightage on the indexes. And property companies usually, they associate to banking companies as well. So these two particular sectors basically dominate the whole China A50 indexes. So this particular incident, which is the debt crisis on China Evergrande, actually put a very dark cloud over all the properties and banking stocks in China. Okay, so this particular incident basically caused the indexes to not perform in 2021. Okay, so but if we look at the bright side, right, all these incidents that happened in China is actually an initiative by the China government to remove the bubbles in the financial market. So if you look at US indexes, the government has been printing money, the QE, unlimited QE, keep printing money. This caused a financial bubble in the United States. But in China, the government is taking measures to remove all these bubbles. So if we look at the bright side, this is actually something good in a way, just that it makes China not performing in 2021.
Yeah, okay. So like you just now said about the China underperform because China disallowed foreign fund to invest in, and then of course the Evergrande. And this, although the China equities market is underperformed in 2021, but the Chinese yuan still strengthened against the US dollars. So what are the factors contributing to this?
Okay, so this is actually something very, very interesting to look at because usually when we talk about a currency, right? When we talk about a currency, usually associate to your indexes, your country's performance because the currency will only strengthen the currency will only strengthen when your economy is doing good or when your equities market is doing good, then your currency go up. But in China, it's the other way around. The currency actually strengthened while the indexes or the equities market drop. Okay, so basically there are two main reasons contribute to this strengthening of Chinese currency. Okay, first is definitely the very strong export. So China export actually go up by more than 20% in 2021. Okay, as compared to the previous year, 2020. Okay, the export figure solely from January to November is already higher than 2020 full year. Okay, so the robust export basically has this thing we call the trade surplus. So the more you export usually likely that they trade in yuan, okay, because you are trading with China company. So a lot of money actually flow into China economy. So when money flow into China economy, they have surplus, hence the currency go up. Okay, because currency always associate to your economy. Okay, so go up. So the second reason is that the divergence of the previously, if you listen to our previous podcast, we talk about treasury yield. Okay, this is something very important for us to look at as well because China and US, because of their different policy, economic policy, government policy, the bond yield of the 10 years treasury bond yield actually diverge for China and US. So basically, the interest rate in US for the bond is really low, while the bond yield, the coupon rate for China bond is really high. Okay, so considering the fact that US is low, China is high, which one do you want to invest if you are the smart money? You are definitely going to invest in China over US, okay? Because the return is 100% higher back in China. So in this case, if you want to invest in China, what do? You need to convert your currency into yuan, okay, Chinese currency, before you invest in China bond, because you buy China bond in yuan. So this particular reason caused massive foreign fund to actually flow into China, high demand in yuan, the yuan just strengthened and to invest in China bond because they are more attractive compared to the US bonds. Okay, so yeah, basically these two are the main reason that that caused Chinese currency to go up so dramatically. Yeah.
Wow, that is very, very interesting to the Chinese yuan and the treasury yield bond. Okay, so what does the strengthening of Chinese yuan that means to the China financial markets? Yeah.
Okay, so like we mentioned earlier about the divergence of currency against their equities market, right? Like I previously explained that currency is always the best thing for us to look at to judge whether the economy is actually doing good or bad because that is the most critical thing, the most it's like a result, how you work doesn't mean anything. What is the result? How you judge the result of your economy is through the currency. So if the currency keeps strengthening, it means that your economy is actually doing well. So equities market might not be the best benchmark in this case. Okay, a lot of people they will say, okay, we look at equities market to judge the economy because if the equities market is doing well, means your economy is thriving. But actually, currency is actually an even better benchmark if you ask me, even better benchmark because currency is the buying power. Okay, so for a currency to go up, it must have high demand. Okay, high demand. So when yuan actually strengthened to 3.5 years high against the US dollar, meaning that the demand on Chinese currency is actually at 3.5 years high. against the US dollar. Okay, so this means that a lot of smart money is actually entering China market, wanting to invest in China asset. Okay, what is China asset? They can invest in bond. Okay, they can invest in stocks market, equities market. They can invest in properties market. They can set up factories in China. Okay, so all these are investment assets. So meaning that smart money is actually entering China due to probably the debubble action, the China government trying to remove the bubble in China market. This could be one of the reasons that money is entering China. Okay, so in short, China market is actually doing quite well. The economy is doing very well, which is why we see the currency strengthen. Okay, so in my own opinion, as long as I think that China, as long as the government has finished, this I'm not sure, but it's something worth to take note, whether China government has finished cleaning up their economy yet. This is we don't know. Okay, as long as they have finished cleaning up the entire economy, okay, I think 2022 will be probably China market will outperform. Okay, will do really well as compared to other benchmark, especially in Southeast Asia. I think China probably will do even better in 2022 if China government finish cleaning up their economy. Okay, removing all the bubbles that they think of. Okay, yeah, that is just my own view lah.
Okay, so our topic for today's podcast is, can China A50 Index roll back in 2021? So now the question we want to discuss is, when do you think that is the time to participate to long the China A50 Index?
Okay, so basically, if you ask me, right? If you ask me, I think there is no better time than right now to really look into China A50 indexes, because if you look at technical analysis, you can see that China A50 indexes has been moving in sideways for more than 6 months now, or about 6 months. That is a very long time of sideways of consolidation. Okay, since July 2021. So I think as long as China A50 is trading at any support, okay, any support, it can be on a shorter time frame support, time frame as in one daily support or on a weekly support. I think it will be very, very good for you to participate to long, because I think the risk to reward is quite good on China A50 indexes at this moment. Okay, and just for all of our audience that are listening to this podcast, okay, if you want to participate the China A50 indexes, okay, we at Phillip Futures here, we allow our clients to trade China A50 indexes at a very low trading commission of USD5, okay, per lot per site. So we are definitely one of the brokers that offers the cheapest trading brokerage for this particular indexes, China A50. So do message us if you want to know more lah. Yeah.
Yeah, okay. Thank you, William, for the very, very wonderful sharing on China market. So I hope it will help the new investor out there, and to our audience who are very, very interested in trading China market, or you want to know more details. So you can just drop us a message on Facebook or website, and our representative will get back to you. And now we have come to an end for this podcast, for today's podcast. So if you have any question or any topic that you want us to discuss next week, you can just message in the comments box below. And thank you for listening to our podcast today, and happy trading for the week. Thank you for your time too, William.
Thank you, Junior. Okay, see you next week. Bye-bye.
Bye-bye.